The moves coming as investors turn their focus to tomorrow's jobs report. Expectations that hiring picked up substantially after a weak October. Will the data get the broad markets moving once again, moving higher, I should say? Guy, what do you think?
Well, it's interesting, right? This jobs number, what are we rooting for? We have this conversation seemingly every month, but what are you rooting for at this point?
Or does it matter?
Or does it matter? I think that's the third, that's door number three,
yes.
Monty, and maybe I'll take door number 3. I'm not sure it does at this point. I mean, the market seems pretty convinced, we're going to be on this lower left, upper right trajectory. Today was an interesting day. Technically, the Carter can opine on. It's not a big deal, but, one day does not a trend make. But the reversals today were interesting. But you mentioned Citi, and that's one that's been a dog for so long, but I think collectively in name we've tried to wrap our arms around, and it's finally showing signs of life and trading where it probably should go to. If you want to be in the banks, although most of them had huge runs, Citi, to me, is still undervalued despite the move it's seen over the last couple of months.
Bank of America, also a nice day today.
By the way, Guy, what's the over-under you think, and what's the number that Mel actually knows the phrase, who she can reference taking their talents to South Beach?
Wow.
I have no idea.
Yes, you do.
I do not have any idea.
Come on.
Okay.
LeBron James.
Oh, there, come on.
That's what
Way to pull it out.
I owe everybody
Right.
money here.
Well,
okay,
I mean, no.
She's good like that. She knows everything. She knows everything. So, in terms of knowing everything, if you knew coming into even the last 3 months that airlines were going to have the kind of period that they've had, it's a combination of the numbers are just better. They're becoming more efficient. They're becoming more profitable. And then you even have an upgrade of Delta's debt today to triple B minus, to low triple B, excuse me. But this is an important upgrade. Again, you think about airlines that have never had the balance sheets to take it higher. So I just say symbolically, and then over to Citibank, again, the worst of the money center banks, so to speak, in terms of their efficiencies. But this has been the year of efficiency for Citibank. So banks will continue to outperform. I think what you're seeing more broadly in the market is an acknowledgement that these companies and that earnings are going to be better in 2025. I think good news is good news tomorrow on the payrolls, and I think you're going to snap back after a couple strikes, a couple hurricanes, and these numbers are going to be real.
I mean, the question for banks, of course, are we getting a redo of what happened in the election in 2016? And we know that financials and banks in particular surged post-election, and yet they peaked 1 month later, mid-December of 2016, and they, to this day, have never achieved a new relative high. I think we're setting up for the same kind of thing, so that a lot of money has been pumped into this area, but it's not going to deliver alpha in 2025. As to consumer, of course, it's a very mixed bag. You've got home builders acting poorly, autos acting poorly, but then airlines and hotels and travel stocks. And so you got to pick your spots.
Yeah. Where are your spots, Mike? And do you think tomorrow's number really matters to a market that wants to go higher, clearly?
Well, I mean, I think that tomorrow's numbers, obviously, I don't know that it's early yet after the election. What we have seen is that cyclicals are doing very well. I think the general attitude is that, the election results are good for cyclicals. And I think we obviously have to wait a little bit to see whether the employment picture and the hiring sort of keeps up with that. But I think it's still going to be positive for that. The hesitation I have with the banks, I have to say, is that if things really pick up and we start to see the long end of the rate curve rise, obviously we usually think about a steeper yield curve as being good for banks, borrow short, lend long. Of course, the issue is for some of them, like Bank of America, that still have a lot of duration on their book, that could be a little bit problematic. But it's going to be good for C&I lending, I would assume, if it's good for cyclicals.